Okay, so welcome to this video. This is another recap video because lately I've been trading the Nasdaq quite a lot and it is giving super clean price action. So I want to make a video to showcase which trades there could have been taken and also show people why you shouldn't only focus on crypto because it gives trades, but if you are only reliable on crypto, it can be mentally also pretty frustrating, because if you miss a trade, you often don't get a re-entry opportunity in crypto. But if you have other markets beside it, you can always find a trade anywhere, and that gives a lot of peace of mind. So let's zoom out first. So Nasdaq has been in this overall, of course, in a massive uptrend. So with this range high, range low, and basically a lot of internal price action right now. And then if we zoom out since last week, where I had my focus on it, price was trending up. So you can see this uptrend right here, trending up and then down. And then we know if you are in an uptrend, you can pull your range from high to low. So this was the range. Let me clear up the points there, right there. So at this point, this was our range high, range low. Then we know we have tap one at the lows, tap one at the highs, and then you wait what price does. So eventually here we get the tap 2, price came back. Then you can extend your range if you want it, just to see where is your deviation threshold, which is right there. So let's say we extend our range with tap 1, tap 2. Then we can zoom in some more. And we also had internal models, but I'm not going to discuss them for now. Then on, what was it, Tuesday, there was CPI or anything, but that doesn't matter, because what can we see, price did deviate the high again. So then you directly have to switch your mind that this is potentially a 1, a 2, a 3, aka a Wyckoff Model 1 in the making. In order to confirm that, you need to break your internal structure. So you can zoom in and then see where do you break your structure. So if you look at it from, you can go to the lower time frames, but you can also do it from 15. This low, high. So this is the low that brings you to that high. So that's your market structure point. So at this point, you break your internal back to bearish, right there. And then you can see that price came back for a retest, never came above your tap 3, and then sold off again. So at this point, this was your 1, 2, 3 Wyckoff Model 1. You could have taken a short position after the break, but often it's better to wait for price to retest supply. As you can see, this supply block was left behind, and the Nasdaq trades really clean because it likes to fill those levels. So what you could have done is that you waited for the break. So here at break structure, then price came back into it in that supply. It created some demand right here, and then after that demand was lost, it was your full confirmation. So you could have taken a trade, for example here, with your stop above that high and then trust that it would hold as your third tap, or you wait for the demand failure, and that's your second confirmation. So let's say you wait for demand failure right here, stop above that high, target the range low. It's not too good of an RR if you took this one. Right here you of course have a much better RR, but it was the safer play. I did not trade this Model 1 myself, but it played out really clean. What I did play was the next range play, because price formed the Model 1, target of the Model 1 is the opposite side, is the range low, got hit right there. So if we extend the range, let's get away with that. You can see that you have your Model 1 distribution, price comes to the range low, and where does price come to? It sweeps the low, but it fails to close below the deviation threshold. So at that point, I always like to look at reversal signals, because this is the level where you either hold and get the move back in the range for another range rotation, or you lose the range by a break below, and then you look for range mitigation, continuation down. But in this case, price stayed within the deviation threshold, so that was my POI to look for longs. And then if you look at structure, for example here, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And then you see that price broke back to bullish right here internally. And I know that even on the 2 minute, price created a structure demand or a pivot demand. Let me see. Yeah, you see that you have your move down, move up, break of structure. What does price leave behind? This demand block. I took already a long on this break with my stop loss below there, but it was likely that price would take out that OPIM, but I was already long because this was my level to defend me. If price lost that, then I was wrong, would have gone out. But as you can see, price moved up, quickly retests the OPIM. Let's see, yeah, right here, boom, mitigation creates fresh demand in the process, sign of strength right there, and then afterwards price continues higher. So this was my long. I had my main TP at the mid range for a 3R, but as we can see, price moved much higher because eventually it let's see, so I took out majority at the mid range here, which was for a 3R, but as we can see, price came all the way for this liquidity right there, took that liquidity and I rejected. So could have let it run for like almost a 5R before the reversal. And then we got price left behind once again. Clean demand, yes. So here I was out, then I saw what do we have. Here we had demand, okay, that's right there. But we also have this hourly block right there. Price came down, broke down here, came into that demand, clean bounce from it. But here you see how this price moves up. What you always want to see is demand mitigations moves up. That is strong. This is exactly what you don't want to see because this is a very weak move up, which often results in a very quick move down. This is like all liquidity. Then what did price came into? Here you had your bearish break. Price came back for supply. Supply during, if we look at the structure right here, low, high, boom. So here you broke structure back to bullish, bearish, right there after you SFP'd your high during the New York Open. So that is also a manipulation hour. So boom, I was looking for a short here, but price was so aggressive that I could not get an entry, but otherwise I would have ran this towards the next demand POI, which was here. But that was too, I missed an entry, but it would have been another nice run. Then afterwards it gets interesting because what does price do? Deviation, move back, lower high, came back for demand, came back for supply, bounce from this demand, bounce back up, boom. Massive move down, and now you can see, is this range still valid? Because here you stayed within it, here within it, but if we extend our range to the second point, right there, and then price moved here. Here you see, okay, our structure is mainly this. So very aggressive move down. That's not what you want to see if you are looking for range rotation. Then price comes back for the range. This stays within the deviation threshold. So yeah, you could technically look for a acceptance back in the range, but because this is so aggressive, you have to be very aware that it's dangerous. Then internally you have this high, higher low, higher high, boom, break your structure back to bearish again, below the deviation threshold. So at that point, this range is lost. Right here, move below your deviation threshold, range is lost. At that point, you can look for range continuations because you lost your range. So then retest continuation down. And that is where we currently are. So last 2 days, there was also some trade opportunities because now there was a mitigation. Here you had your range. Then as said, you had your move up, so they can watch structure from the low up. Breaks back to bearish right here. So this is your bearish break. And you also see it failed to reclaim the former range low. So that to me is a signal, look for shorts, continuation shorts, aka Rimsey play. So here I knew, okay, we broke structure back to bearish. Where can I look for rejections? So if you zoom out a bit, what does price leave behind? Here you can see scanning through the time frames. You see here you have supply right there. So this was my level of interest to look for rejections. It was a deep mitigation because if you also take your fib levels from high to low, then you can see, okay, where is it likely to form a lower high, which is in this zone. However, price came very deep into this whole supply PY, but I was watching structure locally, and then you can see what is your structure. Basically this high, low, high. This is where it gets interesting. Low, new high, higher low, high. So if you zoom in, what do you see here locally? This is now your market structure point. And what I see is a 1, 2, 3. A Wyckoff model 1. Into extreme supply, it's a very deep mitigation, so that's usually a sign of strength. But you see that this was your last low before that high. Then here you came back for supply, even an extreme supply mitigation right here. And then here you broke structure back to bearish. And there. So at this point, everything points low to me because you are in this downtrend, FD distribution, you retested your range, broke back to bearish, lost your range deviation threshold. So any retests towards the range are for shorts. So even though this was a deep mitigation, I still took the short after the break. So here we broke, I entered around here. Stop loss above the third tap, target the lows right here. No, at the higher low at is the last low before the lower low, so the second to last low for a 2R. Not super high RR, but every little win is a big win. Or not a big win, but just a nice win. So this one hit the target eventually right here. So then just clean it up. I share this also in the Telegram, where at that point, let's get rid of it. I said, this is our new range to look at. Range low, range high, classic range there. With a naked low and a naked high. Then I directly saw we have supply around the mid-range. Then we look for fresh shorts. Then what I saw, so we have this naked low, we have this higher low, and that higher low. Liquidity, overall trend is down, so main interest is on shorts, or you need to form clean accumulation models, but because we have a naked low, I was looking for a move back to the range lows. Then what I saw, we are trending up from here high up, so I saw at that point that this was potentially our new range with a 1, 2, this potentially the deviation, but in order to confirm this deviation, you need to break this low, because this is your last low, it brings you to that high, and at the moment that you do that, you need to wait for the break. So let's say you enter here, stop there, target here, technical target, it's not worth it, and you also front run supply, so there's also a risk that you come back for that supply. So I did not take this trade, but I took another range play, just similar as to the higher time frame, where I put the deviation threshold on. Then you see price came far, but directly came back in, retested range high, came to the range low, but this is short range low. Did price close below the deviation threshold? Yes. So at that point you look for a RIMC again, which is a loss of the range, retest of the range low, continuation lower. So what you can see here, you lose your range, then you can watch your upward structure again and ask yourself always, what did price leave behind? What I directly see is these two candles creating supply. So this is your supply POI right there. And how did price move into it from the low up? This is demand, always important to monitor. You also see that price bounced from it in first instance, but here low, high, low. These are not two candles, but yeah, if it's obvious, it's obvious. This is, to me, is a pullback. High, same here. On the 1 minute it is structure, so this is your high, and then here you break structure. Back to bearish. Very similar to that short earlier on the bigger range, but now on the low time frame. Now you see that low time frame and high time frame are basically the same. So here I took short. It was low risk because it's all I think right there. Stop above that supply high. Target the low right there. No, my target was the range low, because the range low was still open right here. Now you see the price came into demand, bounced from it, even here gave high, higher low, higher high, break of structure before price moved to the range low. So this was a 3.8R, also a nice win. And if we now clear it up, watch how is this range looking. Then this is our low. How is the deviation threshold looking? Okay, so now we have tap 1 low. Now we can see how is price behaving here. For now we are in deviation threshold, so I would not short it right now, but I see that we also left some supply behind right here. Price is overall in a downtrend, so the most likely play is to trade with the trend. So am I interested in longs here? Not really. Am I interested in shorts here? Yes. If we flip structure back to bearish, I'm interested in shorts, also because we have clean demand here. And then I may be interested in longs again, because let's say price follows this trajectory, then this is the tap 2, so then we can extend the move to that low, and then we can see that price, the deviation threshold is inside that demand. So let's say this happens, price comes here, does then I'm interested in longs again, because what do you potentially have in the making? 1, 2, 3, breaker structure, model 1, target that high again. So that's what I'm looking right now. Overall, over the past 2 weeks, NQ had some super clean price action. So if you haven't checked it out, check it out. Let me put an alert in this demand. And then maybe later today I will record my new views on BTC. But this was a nice trade recap for potential trades and what I'm looking forward. If you like the trade recaps, also make sure to leave a like. And then I see you later today for a Bitcoin update, which is at a very interesting level right now.